Hey, how's it going?
Good. How are you, sir?
Doing great.
I hope the information that I've been sending you has been helpful. And have you had a chance to have a conversation with your team yet?
The owner is flying back from Europe this week, and I plan on talking to him Friday. If he's not jet lagged. If not, then early next week.
Okay, great.
So I appreciate the information. I've been looking at some other stuff I found on you guys as well, and so it's been helpful.
Oh, did you? What'd you find?
Well, the stuff you sent was great, and then I just looked at some things that I'll tell you. Christopher talking to me was very helpful, and then I asked him the legal question, which I told you about, and he had me talk to his attorney in Castlewood, Colorado. That about 90% of his business is syndication, and pretty good guy. I liked him, and so it's been helpful. But I'm looking at that and looking at I don't hide things. I'm looking at that. I'm looking at pre-share, and then there's a group down here that is probably a little expensive, but can actually do a bond. So just trying to see what options I go, and it's just one, cost of money, and two, how long is it going to take to build? So we'll see.
Did you mention pre-iShare?
Yeah.
Interesting. Are they mostly? What I know is they one of the things they do is obviously they have their own fund, but then they also do they'll purchase like existing positions in a syndication opportunity there, right? Have you been able to see kind of both sides of that coin?
I have. I've wanted to talk to one of the guys that I'd noticed them before I ever talked to him. Deal that's their CEO in line, the guy that's on all their videos. They say he's the next CEO. Talked to him a couple times, and the woman that's on those videos with him. They do a couple different things, and then they told me their sources.
Okay, that's awesome. Okay,
great. Hey, Mr. Toby.
Toby, how you doing?
Hey guys, how's it going?
Hey, well, Toby, if I recall correctly, you had submitted a couple of pieces of content for us to review a while back.
A little while. I'm still working on that.
Are you? Okay. And I had a chance to review the one pager, but it doesn't seem like the deck is pulling anything up at this time.
It's not pulling anything up? Oh.
No, yeah, the link. Maybe I have an incorrect link, or maybe that link is no longer active.
Okay, could be.
Yeah,
it's more of we've got a little bit different model. We're doing a fund of funds model. So we're investing in other people's, we're not sponsors at all.
Okay.
We do the due diligence.
Sure.
And just basically running an investor club and pool capital to get into those deals at a higher level.
Got it. And what kind of assets are you guys investing in?
We like multifamily, but we're asset class agnostic. So we, I just say alternative assets. Yeah. So, but mostly real estate. So we like self-storage, mobile home parks. We definitely look at something like an oil and gas for the tax. We're trying to work with more ultra high net worth and people that have tax issues or capital gains they need to get rid of.
No, that makes perfect sense. So looking for a lot of things that are maybe like 1031 compatible.
Yeah, or TIC. So we're actually working. I have a call later today on a something that's new. It's called a liquid 1031, and it involves using a TIC, but you get all your money out and in the form of a no payment, no recourse loan. So I'm not sure if you're familiar with a tax deferred cash out. So it's kind of like a 1031. It's very, very creative. So we're also networking with family offices. We want to offer those services. So I'm learning some pretty advanced strategies.
Yeah, it's interesting. Can you elaborate on some of those? I hadn't been enlightened on that.
On some of the strategies, or?
Yeah, exactly. We're talking about liquid 1031 and
Yeah, I'm just now learning about that one. But basically, you sell. So you have to start it as a 1031, and maybe you identify two properties. So it's a good plan B, but I think it's actually a better plan A. It does have a higher fee than a 1031. I think it's 6.7%. So we're talking. So if you need to have like close, say $1 million in equity for this to be effective, and then you start the 1031, but then you go into this TIC, which is actually it's raw land that they plan to develop in 30 years or within 30 years, but then you get a note back you get 93.3% of the money. So that's where the 6.7 fee comes out. And then you have a note against that with a 30-year balloon payment. So there's no payment, it's non-recourse, and you have access to all your money. But now you need to use that money for business or investment purposes. But you could pay off debt, you could pay off another property, you could invest in, I think you can invest, this is one of the questions I want to ask, but I think you can just invest in another syndication, because that's where we'd be interested in.
Yeah, that would be really
Because then
interesting.
you can invest, I think you can invest as an LP at that point. So you wouldn't, you can't go from say somebody selling their portfolio of rentals and then go into a syndication, because it's not like kind, because it's an LP, it's not actually real estate.
Yeah, it'd be interesting to get some clarity on that. It's a great question.
How many people do you have in your investor group, Toby?
So it's just an email list right now. We're trying to add more value by doing webinars and in-person meetups. We have 400. We're not super responsive because we realize we've just been sending out deal alerts. That's it. So I've watched some of your webinars and learned that we need to provide more value than just sending out deals. So now we're doing the due diligence up front, so we're vetting other sponsors. I created a lead magnet called the red flags, and the questions you need to ask the sponsors, and the questions that identify these red flags. And there's about 170 questions in there. Real short, just what's the question, why you're asking it, and the answer you're looking for.
Yep.
About a 40-page.
Nice way to put that together. That's great.
And I think that's the main lead magnet. I've got kind of pretty simple one on there now. The 10 mistakes investors are making on the homepage.
Oh, I see it. Yep. Okay.
And that's a nice short one, so it's easily digestible. Where this one is has more value. But it's a lot longer.
What's been your kind of response in terms of so how are people finding your website? So it's acceleratemycapital.com, just so everybody knows.
So we do run an in-person meetup called the Cash Flow Club, and that's pretty good. We get about 60 people there. Not everybody's passive investors. A lot of them are people wanting to get active, fix and flippers.
Sure.
That's where we started. We started in the single family residential, and that's where a lot of our people on our list are. So they're not, and most of them are not accredited. So that's the other issue we're having is we got to do 506Bs just so they can participate. We have done a C. We didn't get a huge response. I think a couple of people got on the webinar, but they weren't accredited. So yeah, we want to attract, way more accredited and even qualified investors.
Yeah, sure.
A lot more we can do with the tax strategies and just the network that I'm building around that.
And so then I think to kind of extrapolate, the meetups is really the primary source of traffic.
Right now, we're going to get a list. We're looking at Brad Blazer's Capital School and just doing his we really like his four call, where you don't really have anything, which is good. You're just building the relationship. So we want to add brand new people that don't know us. So we want to build that relationship. And then I wanted to develop the lead magnets in advance. So just so we had something to send them right away.
Yeah, I think that's smart to have that in place. So I'm sorry, I'm not sure what Brad was offering. He's saying that you get to have a call with these people, or how does he introduce you to them?
It's a training he did. It's where you call once a week basically, and you get a list. So you get uses a list broker to get people who have invested in multifamily before. So you're not, you're starting, higher, lower, wherever in the funnel,
Sure.
closer to the bottom. So they already know what syndications are. They've invested before. You're not such an uphill battle.
Yeah,
and
that makes sense.
And just introducing yourself, say, hey, got nothing for you right now, but this is what we do, is who we are. We really just vet other sponsors. Realize people don't know, that you're busy, you run, you're a doctor, lawyer, you don't have time to, or really the know-how to know the questions to ask. So you're passing on good deals, and you might be investing in deals you should have walked away from. We take the heavy lifting off your shoulders and do a 220-point due diligence process with every opportunity we put out. Now, we still want them to do their due diligence, but heavy work, all the hard questions have been asked and they've gone through our vetting. So that's our value add right there. That's our USP.
Yeah, that's pretty tremendous. Are you able, let's say somebody pops up on that list and they say, hey, I'm looking at a deal. Would you vet it for me? Is that something that you offer them as well?
Yeah, that's something I've definitely considered. And I've actually created a page for that. Part of another group of fund-to-fund managers that we vet deals together, because just by myself, I don't have the skill set to do that. So we do that. We'll vet deals as a group, and sometimes as a third party underwriter.
Nice.
But yeah, we'll do that.
Yeah, I could see that being valuable. Someone saying, "Hey, I saw something, but I don't know if it's good.
Mhm.
Can you help me out?"
That's something I thought of as a good just good way to attract people. Hey, do you have something you want a second opinion on?
Yeah.
For a fee, we'll do that due diligence.
And I could see how that might feed into something you're more actively promoting, because you could say, "Hey, I saw this, we underwrote this. This is how it might compare to this one," and then they're like, "Oh, look at that,"
Or
if it is actually better, or if it's their criteria better, that might be of interest to them. So,
yeah, we look at it as a way to meet other sponsors too, because we might really like the deal and invest with them in the future, or invest in their current project.
Absolutely.
So already got somebody kind of lined up that's looking at it.
Yeah, that's awesome.
We do enhanced economics where we say, hey, we want to write a $500,000 check, with our, 5 or 10 LPs. We're going to come in as a big LP, and they usually have a share class, or they'll create a share class just for us.
Yeah, that's awesome. I think so
it doesn't cost them anymore. In fact, they get a little bit better returns going through us rather than going direct.
I think that's a really enticing thing to highlight too, right? Like, hey, look, we've been offered a special class, so if you're investing alongside us or through us, you experience this benefit. I think that's great. And these are, I'm looping back to Brad's listing. Have you started talking to those leads, or how did you choose to engage the list that was provided?
We haven't even got the list yet, but just like the idea that they've already invested in multifamily, so we're not starting from scratch. So the pitch deck I sent you is actually a webinar. It's not really a pitch deck. It's just how to make money with real estate investing in multifamily, and it takes them down that path. This is how the ultra wealthy invest. So it introduces them to alternative assets other than the stock market, and why multifamily performs, we think, better with less volatility. So we feel like a portion of your portfolio should be in multifamily, and then talks about syndications and the fund-to-fund model, and then leads into, call to actions, join the investor club, just so you have access.
What are the costs associated with a list that you're looking at?
Yeah, I think that was only like $300 for 3,000.
Okay.
So it's really attractive for the pricing.
Yeah.
And I'm curious if that, like, how good it is. I've all throughout my time in the industry, I've heard of people buying lists, right? How you approach a list is
that's the key.
It's a very something you should approach with caution, is what I mean to say, right? So I've seen all the mistakes. The most common mistake I've seen is they're like, "Oh yeah, I have a list of 3,000 people now. I'll just throw them into my CRM and start emailing them," right?
Yeah.
And then they get
spam anyway.
Yeah, and they get shut down. Well, they get in trouble with their own CRM. So let's say it's like your Active Campaign or HubSpot or whatever.
Yeah,
they'll flag it, because they'll say, "Hey, you can't just throw 3,000 leads in here and use our platform to spam," as they see it. And I've seen people get shut down by their own CRM and say, "Hey, we can't serve you anymore," and things like that. On more than one occasion, I've seen this happen. So a lot of times we've seen, we have a guy, and I'm thinking about Connor right now, Vitali, who kind of specializes in being able to tread lightly, is what I would say, in this emailing these kind of colder lists, right? And so it kind of goes out in batches. So you're doing these kind of smaller, like to 100, 200 maybe at a time, having maybe an opt-in process. So this kind of doubles as, one, making sure you don't land in the hot water I mentioned earlier, but two, you also start to filter and see who's most interested, right? And you start to accumulate the most interested people in the CRM. There's all kinds of stuff that goes into making sure this list is scrubbed properly. You're not landing in hot water.
Yeah, we're definitely doing it in batches of like 250. So we maybe call 50 a day, or attempt to call. Not everybody's going to answer, but 250 a week, and then call that 250 before sending out any more. And the idea is, we're just introducing ourselves. We don't have anything for you. This is who we are. And then start asking them the questions. What are you looking for? What have you invested in the past?
Yeah.
And try to get as much information about them as we can. Then send them our one pager and website. Week 2, we call back. Hey, did you get the resources? Did you have a chance to look at it? So if they're new, or if we go higher level, I'd send them the webinar once it's done. But for now, I'm going to start with people who've already invested and potentially business owners. So I think we can stack that list
Mhm.
and in our zip code, because we also want to do in-person events, like appreciation events. We're doing barbecues and we're going to invite them, where we just go rent an Airbnb for the night and have a barbecue and have the investors over just so they can meet us in person.
Mhm.
That's tremendous. I like the local approach. That's really cool.
They'll
Are
be
you doing all the calling, Toby? Are you going to be dialing 250, or you got some help over there?
I am to start, because I want to get really good at these calls and build
Okay.
that. But the very next step is to get a VA to make the first probably 2 calls. And the second call is just, hey, did you get the resource? And then call 3 is, hey, we don't usually have allocation for new investors, but if we do, would you like to be notified? So that's the kind of the hook there. And there's a little bit of, fear of loss or no, more exclusivity than anything. And that's where we'd say, hey, okay, well, make sure your email, go drag our email into your primary box or whitelist it somehow, and would sit there on the phone while they do that, because we don't want you to miss these deals. And then we'll ask if it's okay to text them at that point. Other than that, we want to build that relationship before we start sending. We feel like that's too personal to send an SMS if you don't know who the heck we are.
Yeah.
Yeah,
So
SMS
now we've had
is
3
a
phone
sacred
calls.
place. Yeah, SMS is
Yeah,
a sacred
especially
place.
with high net worth. Their cell phones, they're busy, especially
Yeah.
business owner.
I'd like
I
to
think-
offer an alternative perspective. And there's really 2 types of ways to kind of approach marketing to investors. And but if you kind of think about the investor journey, right? It spans from, I had never invested in the past. I may not even know what I may be accredited, but I may not even be familiar with the term, right? So you're starting at the very, very, one side of it. The other side of it might be, I am a professional investor. I already have an alternative portfolio. This already may be my 3rd, 4th, 5th, 6th, 10th real estate deal. And I'm evaluating offerings. One is, I'm looking to learn more about real estate as a passive investment. And the other one is, I am evaluating my next investment. So and it sounds like you're kind of we're teaching you about real estate, right? On one end of the spectrum. If you could, is that where you would stay, or would you rather be working with professional investors?
Well, I'd say both. I mean, we're starting with the further along journey. That's why I say lower to the bottom of the funnel.
Yeah.
I guess the way you're describing it is further along in the journey.
Mhm.
We're starting there because that's an easier conversion. They just need to know who we are, and then start seeing understand that our really, really hit hard on that due diligence that we do up front, so they understand the value. And even though there's that second layer of fees through the fund of funds, we're absorbing that with the higher share class that we're going into. Now they may have 500 grand that they could just go right to that investor and still get that same deal, but maybe they don't have the relationship if it's a 506B, which maybe the second one they do go straight, but hopefully we do our job getting well enough that they just invest through us, especially if we're meeting in person. But I mean, if we could solely, that's less work. So I think if I had to pick one or the other, I'd stay there. So anticipating maybe we run out of those or just want to expand and go further in the beginning of that journey and do some education pieces. Cause we like, if you're doing a 506B, you can't advertise
That's right.
the opportunity, but you can sure, do a webinar about it. And so I think the next step is just to do more education anyways. Even if they understand it, they'll say, well, these guys seems like they know what they're talking about. Maybe I'll give them a chance. And we're really early on this. We've started, like I said, we started out just doing single family strategies and just didn't have enough, but we were doing it through investors, but like one investor would buy a house, and we just didn't have enough deal flow for that. And this is a way to address new deal flow. And we like multifamily and syndications and
100%. Something we've noticed in the past, we've done, Vitaly and I, where we did everything in the agency, right? We built all the websites and the long form, long chain email, things like that, built out the lead magnets. And I suspect you already know this, but the people who are going after your lead magnet, they're just learning, right? They're just barely getting into this typically, especially if it's like, hey, the 10 things you should know, the 6 red flags, whatever, things like that. They're way closer to the top. And then, the style of advertising that we do is people that are more in the middle towards the bottom of that funnel, right? But how long it takes, they weren't even our clients, just someone we were in close talks with. you know, they had a really strong lead magnet up top, and you know, they hadn't seen anybody convert from it for a while. So that's not to say no one would convert with them, but it's important to be mindful of the velocity of capital, right? Like how soon are needing to bring this in, and the lead magnet way, you know, kind of you know, it's probably much more long tail, is what I mean to say. I think it's just important to keep that in mind. I'm thinking of the Oak IQ boys, Vitaly.
Oh, yeah.
You know, yeah. So and they spent quite a bit of money. They were advertising that lead magnet for a while, and they spent a good chunk. And they're like, hey, it's getting leads, but none of these people are that, you know, they learned a little.
Were they calling their leads?
Yeah,
they were.
Oh, actually, you know what?
Or were they not getting the phone number?
That's a good question. I don't have to kind of watch that recording. Suffice to say, let's pretend, let's be conservative and say they didn't take all of the right action. They just had an email sequence following up with them. They just didn't seem to be happy with the results, right? They're kind of like, hey, these people are in here, but it's not raising for this opportunity we have right now, right? And that was kind of something they were struggling with.
Yeah, and
also, go ahead, Tom.
I was just going to loop it back to Tom. The way your campaign would work is that it would be driven around the offering itself first and foremost, but we would weave in kind of the sponsor background in that messaging. So it would be in the pitch deck, it would be in the webinar, it would be in the email sequence. So that, because remember, here is the top 3 things investors care about most. They care about the projections. What does my portfolio stand to gain? Then is who is behind these projections, who's making these claims, and then on top of that would be the asset class itself and how does it align with my personal thesis as an investor. So our whole job is to package that whole thing up, and that's kind of the messaging, you know, kind of the order of priority of how we would weave that, you know, we've how we would build that campaign.
Yeah, I wanted to mention something else about the lead magnet and the style of presentation. So something when Vitaly and I did do lead magnets, we would instruct our people to record a video over it, like it's its own presentation, because one of the key factors in this whole capital raising world, private equity world, is this speed to building trust and fast. And one of the fastest ways to do that is just like this, right? On video, having people hear your cadence, how enthusiastic you are about it, how passionate you are about your offering. And so instead of just this kind of static PDF that's just like, boom, they can absorb it that way, you could still offer it to them like that as kind of like a sub CTA. But the big button would be, hey, you know, watch the video, and they get to meet you, right? So you're presenting over this PDF. And that's the same thing we do with the decks, right? When we have people create their decks, we have them record over the deck. One thing, other thing I'll mention about this is the length. We're learning this very quickly. We learned this very quickly too, which is, you know, a lot of times people are like, oh, I created an hour-long webinar about the opportunity, right? But it's important to keep in mind where these people are coming from, right? So mostly these are people coming off of social media. Nobody's going to Facebook or Instagram or wherever else. I'm like, I'm looking for my next investment, right? They're just there, you know, looking at cat memes or whatever. And so they're in this kind of scrolling mode. They find something, go down the rabbit hole. And if they are confronted with like, okay, here's the video, it's an hour long, and they're like, oh, I don't have time for this. I'll come back to it later. And do they ever come back later? Sometimes, you know, they're gone, you know? So we're seeing that this kind of 15-minute-ish presentation on a deck, which sounds like maybe I don't have enough time to do that, but still we've seen people who've done it, seems to gather a lot of attention. This is based on data that we were able to plug in with a tool. Wistia was a tool that we used, and we're able to see the stats across clients. And the longer ones, people drop off fast, I imagine, because they're just looking at the length of the video and saying like, nope, don't have time for this. But these, it was actually a 12-minute one, right? I think Corey's was right, Vitaly. He had like a 12-minute one, just a quick like, hey, this is what it is, boom, in and out. And it was what, 70%, I think.
No, like 40.
What was the 40%? Sorry, where did I get 70% from? But anyways, significantly higher than what we saw in the other clients that had longer videos. So
that basically 40% of the people make it. they watch it all the way to completion.
All the way through. All the way
40%
through.
is really high.
That's a big number.
That's huge, right? That's
Yeah, it's
tremendous.
huge.
That's tremendous. And so like we were blown away, and we're like, oh man, this is what's kind of funny is initially when Corey had recorded that, I was like, man, is this really gonna be enough information? Are people really gonna resonate with this? Seems short. Maybe they would want all this information, but no, it's actually better because we still offer them the deck, right? There's still an option to go ahead and grab the material. But what's more important is that Corey appears as a trustworthy person. He is a trustworthy person, and he communicates that through the video, covers it quickly, and then boom, it's information communicated. Boom. I would say that principle would apply to kind of a video over a lead magnet as well.
Okay.
Yeah, for sure. Think of it more of like a like a video sales letter, a VSL, instead of a webinar.
Yeah.
Okay. So with the red flags due diligence book, it's pretty dry. I don't know that would be somebody would want to watch even if I could do it in 20 minutes, which might be pushing it.
Yeah.
It's about 40 pages.
Yeah. Well,
I think that would be kind of boring.
I'm sure you could hire a designer off of Fiverr, or if you have a marketing professional, you could have them rebuild a slides. Like, here's what you do. You take that
Slides,
throw it into ChatGPT, be like, make this into a slides presentation for me, right? And then have a designer kind of go through and optimize it. And then that would make, and instead of like having a button, sorry?
I said add pretty pictures.
Yep.
Yeah, basically, yes. And branding and, really, and then instead of having the button on your website that says watch the video, just actually show them the video, right? Like here's an example I want to show you real quick. Like here's a video, here's a campaign that we're just about to launch for the CSI Growth Fund. And so one of the partners it goes by the name of Xander. He's in this video here, but if you notice, I just landed on the website and the video is already playing. All you have to do is just put out where exactly where they click that. So the video is already playing by the time they land there. And so very, very simple. This would take them to the webinar page. And then on the webinar page, there's only a couple of things to do. One is watch the webinar. His is a little bit on the longer side, I think. I don't know how long it is. 15 minutes.
No, he did good. He followed our instructions. That was good.
He did great. But you know what? I would even say, hey, make it shorter. Make it 5 to 10 minutes. Just, again, you don't have to cover everything, because you have most people, they go here, view the investment summary anyway. So they go here, and there it is. They can review it on their own anyway. They get an email with all this information. There's a way to schedule a call right here. And then the call to action after that is to reserve your equity, and that will go to the Appfolio or whatever your investor portal is. And so the point I want to illustrate here is that you have to build, there's no substitute for building a brand and building trust and leveraging that. And then you have to kind of know how to deliver all the key identifying what the key pieces are that you have to deliver, and then delivering to the investor in an easy and digestible way that keeps in mind the context of where they were when they received this information, so that they have a high chance of moving forward in your funnel, right? Because there can't be any disconnects there, because they're going to jump off. And so these little tiny nuances of where they came from, where they're going, and what they're doing on your funnel, they make or break the
experience.
The experience, right? Because the difference between a 10-minute video versus a 15-minute video, forget about it. But yeah, granted, they're still getting emails with all this stuff, so they have another chance of getting in front of them. They get text messages that make it easy for them to schedule a call. But that's kind of it, right? Like, be very mindful of the things I just mentioned, where they came from, where they're going next, and what is the experience of the funnel that you're building.
So the other thing I want to do with that list of 3,000 is upload them to a custom audience.
Yes.
Maybe just some Google banner ads. What would you recommend that lead to, or the call to action there? Because I don't really know us yet. We're probably still pretty cold, but hopefully when we get on the phone call, they go, oh, I think I've seen Accelerated Capital somewhere before.
So something I would say, I I couldn't speak to Google just yet. I've run Google campaigns for syndicators before. And the banner ads for any campaign I've ever done. I've done Google ads for plenty of other businesses, but they're not great. I can speak to and have a lot of experience with Meta, so Facebook and Instagram. And let's say that list is I think my main concern is is that list really what he says it is, right? Is it really these people? And let's say it is. You can go ahead and market directly to that list via Facebook or Meta. You can also create the lookalike audience where Facebook will go ahead and take the collective profile of that list and look for people who match, match that collective criteria, essentially like, hey, all these people are accredited and they've invested, and it'll go ahead and start to find more of them. That's how I would leverage that list. I'd say that those would be the first strategies to employ, right? Especially because
I want to share real quick
go ahead.
too, as we're talking about this. I want to just kind of complete the picture here. So here is the actual graphics that we're going to be launching for CSI Growth Fund. So the funnel that I just showed you, these are the graphics that are going to be taking them there. So the actual content is key to, like when you're like, oh, well, I've got somebody running Facebook ads for me, it matters not just like somebody who has access to the same tools. It's like having a race car driver, drive the same car as somebody who's just, a civilian, right? Like a race car driver is obviously going to drive the same car better, right? And it's kind of the same analogy here, is that the creative matters a lot. What you're saying, and I'll tell you right now, one big number, something attractive to lead with, right? That's the number one, the projections that I was telling you about, right? And who is the sponsor, right? So weaving both of those in is really important. And so I haven't even actually seen these in a while, and yeah, these are great. And we have a ton of these that I could pull up for different clients. But this fund is for a land development asset class in Hawaii, and so obviously we're highlighting a lot of ocean, a lot of pineapple.
So you're hitting it all. You're hitting the asset class. You're hitting the numbers, the projections, and as much team.
What was your thought there, Tom?
I was saying, who actually created these slides?
So
we
that
did.
Our design team.
Okay.
Yeah. And so these two have a video ad component. So it's not just like visuals, static image. We create motion graphics and video graphics as well. And this is something that our team generates. But really, all to say is that there is really not a shortcut for getting in front of investors and building genuine trust. Like you have to, really, our system makes it easy, and we just know how to do it. But yeah, but as you were talking, Toby, about launching, banner ads and stuff like that. And we've done all sorts of stuff, and really every time we come back to Facebook and Instagram, because their platform is much more refined than
Vital, you mind if I share my screen real quick as well? I wanted to showcase a quick video too.
Would you stick with promoting in the banner ads a deal? I mean, so we could do a 506c and promote a deal, or would you try to build, in my case, try to just add them to the investor club as the call to action or the offer?
I think you could do both. We have more experience promoting the actual offering itself. And it's certainly, and here's the thing too. Well, every single campaign that we run can generate different results. We could be doing the exact same thing for one sponsor and as we do for another, and they could have totally different results. But there's not a whole lot of variance as to what are pulleys and levers that we have access to. We just have to try all of them and see what works best. It's kind of funny like that, but that's just how the universe is made, I guess.
Yeah, we just run through run through the gamut essentially, right? But we have a core strategy, the core to yield, right? The variance happens. Go ahead.
I was just gonna say our whole thing is just going through the testing process and as efficiently as possible to identify what's going to win.
Yeah.
Yeah, as I said, you could always split test the two as well.
100%.
Exactly. Something I wanted to share real quick too is on the vein of creative, right? Something that we've done pretty good at establishing is one for client Ownify, and being able to create these videos, but it's the amount of time that we're able to create them, right? Like it's how fast can the creative get stood up? So many times back in the day. Go ahead.
You should share the tab and actually have the audio play.
Let
You
me
have to,
just
like,
give a quick visual
click
here.
here.
Okay, so I
Yeah,
just
sure.
wanted to, I don't want to take too much time on this, but just look how things are moving, motion,
Yeah.
right? Like having
Yeah, it catches the eye for sure.
And the voiceover is really exceptional.
the voiceover is tremendous. In the past, we would have to go and hire a voice actor or try to get them to record their voice, and didn't work. But with this, the pace of AI and things that are happening right now, we're able to kind of create these videos in a short amount of time. I've worked on teams in the past where, man, people used to spend days working on one creative and being like, is this imagining that this is going to be the ad that lands, right? Not realizing that's like, whoa, we're going to test a bunch of stuff to see what sticks, right?
Mm-hmm.
And that's what Vitaly's analogy was about earlier, about like NASCAR, right? Like, you can't just take somebody off the 405 freeway here and say, hey, well, he drives a car, go ahead and throw him into NASCAR, right? Like, no, you need someone who's professionally trained to go fast and knows how to get this stuff moving. Yeah.
But I hope that's kind of helpful. You know, by no means do we mean to discourage you from. I hope you didn't feel that way at all. First of all,
I feel like that's why I was interested, because that's our next phase. Is, you know, once we get something that's working a little bit, let's throw fuel on the fire with ads. And,
yeah, absolutely, 100%.
Yeah,
guys, we're approaching the end.
We have another that we're launching. By the way, I just want to mention real quick. We have a 506B that we're launching as ads. But again, it's us promoting kind of the investor club. So as soon as we get that across the finish line and get some data, I'll be sure to share that with you, Toby.
Okay, I appreciate that.
Guys, we're approaching the end here. Did you have any other questions for us?
No, it's just helpful. I'm just trying to be a sponge, so it's very helpful.
Oh yeah, we love having you guys.
Yeah, you're doing great.
Yeah, Tom, doing awesome. But guys, it was great having you here with us. This is what we're really hoping for. This kind of like fireside chat style is really nice. So we appreciate you guys jumping in, and we love having this conversation. This is what we live, eat, breathe. So grateful to you guys. Thank you so much.
And let me know how I can help you guys too. So,
Thank you.
Appreciate that. Nice to meet you, Toby.
Likewise.
Take care, Toby.
Bye.
Bye.